plenty of people watching that when it's out over the next wee while. But so let me welcome everyone once again to our weekly broadcast. This is our Thursday from 10 to 10:30. Brief update on the market, a little bit of update on what's happening in the world of equity property crowdfunding. But the real part is education. We want people to pick up some things they didn't know before they joined the call. And of course, we always have on a special guest to really deep dive into an aspect of the market and bring expertise to what we're doing. So today, my co-host as normal, Mr. John Corey, back in the center of almost the center of the universe in London. Obviously, Northern Ireland is the center of the universe, but back in Europe's major city. So, John, good morning. How are you?
Good morning. I would say I'll just claim that London's the center because of Greenwich Mean Time. It's the 0 point. So
that's a good enough one. And today, delighted to welcome back one of our almost going to call you a regular contributor, Dan. But good morning, Dan Taylor. How are you?
Yeah, very well. It's always great to be back on the show with you guys. It's always fun, interesting, and always take something away.
Yeah, no, absolutely. Looking forward to your latest. It's been a few months since we've kind of heard what you're up to in terms of what's happening in the world of commercials. So really looking forward to that. In a few minutes, we'll be deep diving into your take on the market. So before we went live, you were sharing that you're actually over in Spain at the minute. And what did you say the temperature was?
Yes, it's an incredible 27 degrees today. And it's 4 degrees back home in Kilmacombe, where I was going to say where home is, but home's here and there. So it's it's a wonderful world. And I suppose, real estate in general or investing in general kind of gives you that flexibility when you get to a certain critical mass, which is good. Great.
Correct. It's about choices, and you've got a choice of where you spend your time, which is fantastic. So, okay. So let me first of all just update the attendees on some really exciting developments within the world of Leo crowdfunding. So in Q3, we actually funded 5 projects to the tune of 867,000. That was actually more than double what we had funded in Q2, which is very exciting. So we've had some really good success with projects that are in front of the curtain and also behind the curtain. We've now raised over 2 million for 15 projects, and really sort of been exciting, John, to see this sort of momentum building with multiple fundraisers, different types of property projects, front of the curtain, behind the curtain. I know a couple of these are sort of clients of yours, people you know and have worked with. It's really been an exciting quarter.
I mean, it is very interesting, and the 2 million figure is almost deceiving because it's the equity that enables a bigger deal. So if it was a normal construction project and that what was raised was 100,000, it might be a £1 million project. If it was planning, fine, it's all equity, but it still might be a multi-million pound project. So this 2 million is like that seed capital that sort of helps other things grow and helps sort of the people that are running these projects move forward in their lives so they can be living next to Dan in 27-degree weather.
I think what's also interesting in that £2 million probably equates to, like you just said, 10 to 15 million pound of projects. But how many homes has that created? And that's the real impact. How many homes that you've created for people to live in that are very much short supply just now. And I think that's the real, when we always look at the numbers, but what's the numbers actually, delivering to the market?
Yep. That's a good point, Dan.
Yeah, no, very, very good point on that. And so the ones in the middle here were ones that we call public facing. We're in the front of the platform. And the two either side were actually private raises. This is where a fundraiser developer came to us. They have their own investors, but because of compliance and investor management and all that goes with that, they wanted to process their investment into their SPV through our platform. So this worked very, very well. And one of these was a 400,000 deal, which is now our biggest deal in the platform. So really excited with the progress we're making there. In terms of Bridge Road, we drew down on it, I think, just yesterday from a member of the team told me. So that money has now gone to Ed Morgan, and he's getting on with the project. So we had 43 investors raised 100,000. The average investment, £2,325. Pretty normal, John, I think, for this type of a project. Shows a good mix of investors. And some might be putting in more, but a lot are putting in a small amount by way of learning and education.
Yeah, I mean, I was listening to some people that have nothing to do with crowdfunding, and they were talking about how do you build a relationship with people that have projects, and you start with small amounts of money. So that 2,300 plus is a blended number. There's definitely people putting in 5 figures, and there's people putting in 3 figures. And it's a great way to get started in investing and testing relationships. Put in amounts you can afford to lose. I don't want you to lose them, but amounts you can afford to lose while you're dealing with, I don't know who this person is, I don't know what they're doing, but I think it's interesting and I want to get to know them. So I'm going to put something on the table to show my commitment.
Yeah, just out of interest, David and John, what is the minimum investment again on the platform? Is it £1,000 or is it lower?
It's normally for most projects, Dan, £100. So most of the projects are education projects. So we allow people in for £100 to access a front row seat of the project,
that's quite incredible value, isn't it? £100. I mean, in education, getting educated for £100 is incredible, but getting exposure to different deals is pretty significant. But what's incredible is for £100, you get a copy of all the loan documentation that you may be able to use in another deal you do somewhere else. Now, getting a loan document for £100 is probably one of the most cost-effective things you could probably do.
Yeah, actually, a technicality. It's because it's an equity raise. You end up with a shareholder agreement rather than a loan document. But I think your point's a good one, Dan. That for £100, you get to see the journey. You get to see how the people operate, how they communicate. You get copies of all the documents. You actually get a list of all the other investors because they're all shareholders. And you get that full experience. And the FCA's made a point that they want people to learn how to invest. So they want people to be able to put in small sums and build their knowledge and build their expertise.
Yeah, absolutely. Citygate House project then, just quick update on those that were involved in this. Second tranche is now closed. The whole project is now finished. So in total, we raised 240,000 from 36 different investors on this one, and it closes today in terms of drawdown, just for those that are on that. So we've literally got like sort of a minute on this, and Dan, more than happy to hear your input on this. We always talk about sort of one thing that's in the news or in the conversations around property. This week is the Pandora Papers. So this supposedly breaking news. I don't think for most people it was anything dramatic, but the fact that there are these secret owners of UK properties, offshore firms. John, I'm guessing, to use an American expression, this is a bit of a nothing burger. But I don't know what your thoughts on it, and then we'll go over to Dan for his thoughts.
There's one side, you want transparency so you don't have money laundering. On the other side, people should have a degree of privacy in their lives if that's what they want to do. And in most of this, they're saying there's no reason to believe the actual transaction itself was a problem. Maybe the individuals are like not expected. Cherie Blair and her husband Tony bought a property from a seller. The seller was actually selling the company that owned the property. After they bought it, they deconstructed the structure, so they put it back in their own name because they wanted it to be more appropriately transparent. So they are on that list. So there's a potpourri of things, and I find it interesting. Fine, it's noteworthy. It's titillation. It's 1,500 properties. There's 23 million or something like that residential properties in the UK, plus however many commercial. So we're talking a tiny number of properties, but it sells newspapers.
Yeah. Any comments on that, Dan?
Yeah, it's just like John said. This is a tiny fraction of the homes in the whole of the UK, and in terms of, you do have a moral obligation to pay tax. But if you look at the tax book, all the tax saving strategies are hidden in plain sight in the tax book. You need to be creative, and then you need to surround yourself with professionals who can not only deliver that strategy, that idea that you've got, but can also put some professional indemnity on the line as well. So I think we all, as investors, have a moral obligation to retain as much as possible. but and keeping legal. I'm talking about doing it legally,
Yes.
using existing strategies within the tax code to the best advantage. And by doing them, you retain more, therefore you're compounding more. As long as all this stuff's legal, well, I don't see the big problem. I think I'm just making a big song out of nothing. It's the usual thing. There's always going to be offshore. You see, this comes back to the root cause of this. See, like Hong Kong, tax is 15%. If you pay it in a one, it's 10%. See, if it was like that over here or everywhere else around the world, there would be no offshore tax havens because there wouldn't be a requirement for them. Yeah. So, I mean, that's a different story and a different rabbit hole to go down.
But it is interesting. It is interesting, Dan. It's a very good point to make. The more complicated you make things, the more people look for alternatives and look for loopholes and look for different ways to beat the system, as people would say, rather than just having a very open, transparent, simple to understand, tax code, and everyone can go with it. So it's very interesting. I was looking in vain for John Corey's name on one of these sort of secret billionaires that owns something in central London, but I didn't see your name on it, John. So you managed to.
Well, I wouldn't get my information stolen.
Very good. Okay, so before we go over to Dan, we always have a one slide Ask John education section. And the question that came in this week for John was, I find it hard to find the time to network due to my hamster wheel job. Anything I can do to meet more people in property. So if you want to have a quick speak to that, John, before we go to Dan.
Yeah, that's right. So the question really is following almost the Toyota principle, the 5 whys. Like, why do you want to meet people in property? And then digging why 5 times and getting to the root. So are you trying to invest cash? Are you trying to find a deal? Do you want to move home? You got to have some context, and it might not be appropriate to network in person. It might be easier to do it online, and you might find more people that way. Second of all, your hamster wheel job could be a good source of people for property investing. They, talk to them if you're there all the time at the job. I know as an ex-IT guy, there's a lot of IT people who invest in property. They have cash to maybe invest. They like numbers. So it's a great sort of non-work topic of discussion. But when you're clear what your why is, then it becomes easier to find solutions. It becomes easier to identify where to go, who to talk to, what to do, who to reach out to. Maybe reach out to someone like myself, and my network can then be by proxy available to you. The other last thing about that is, after you figure it out, you might have to just hustle. I get hamster wheel job can be a problem, but if you're trying to do something on the side, you're going to have to find a way to fit it in or give up on the dream. And I'll give you a real quick funny story. My little daughter at the time, very under a year, she's in my arm. I've been putting off this project for weeks that at work, I'll say I'll do it on the weekend. And on the weekend, I say I'll do it at work during the week. And then I looked down and I realized, I was a new dad. I was like, oh my God, she takes time. And I'm really cool with that. But that means I got to give up some other stuff. I got to make some hard choices. So if you're in a hamster wheel job, you don't have any time to network, you need to bite that bullet and say, look, I'm not going to network. It's not going to happen. Or I'm going to have to do it during my lunch break. Or I'm going to have to cut back on the work and take a hit of my bonus or whatever. But you can't magic up a solution.
Mm-hmm. No, very, very, very good. Very, very good advice. It's so important that people manage their lives and their goals are aligned with the effort and time they put in. And networking takes time, takes effort, and you got to deliver that. So, okay, let's go on to Dan. So delighted, Dan, you could join us. And I've heard you a couple of times in recent months, be it on Clubhouse and different events. And I think you've got a really great take on this. The greatest wealth transfer since the 1930s is one of your big slogans. So the Great Reset, and I thought it'd be great for you to sort of share the high level of this with us today. So let's go and introduce yourself, really, from your background, what you do, and then get straight into this, and just let me know when you want to change slide.
Yeah, no, absolutely. I mean, just before I do that, on that last question, I love that question, and I love John's answer about find your why. As soon as you get clarity, everything else becomes simple. And then as soon as you get that clarity and you've got a simple, you know where you're going. For me, it's always about one thing. How can I outsource? How can I leverage? I.e., think about this. think about a who, not a what. Who can I get the what to do? Who can do the what? What is the what? It's your clarity, it's your why, and then go and find a who to do that. And therefore you've outsourced the whole thing. So that for me is critical, and it's why I suppose Leo is so good at what they do, because they are your who to do the what, to obviously collect deals together so you can invest into them. So you're by using Leo, you're very much outsourcing is leveraging your time to the maximum. So you're hardly spending any time assessing these deals, any time sourcing the deals, because these guys are doing it all for you. And you just got to think like that. Who could I get to do the what? Yeah. And so anyway, hello, my name is Dan Taylor. Great to be here again. Always love talking to David and John. And I've been in commercial property for, my goodness, 30 years. We've done a number of deals, about 41 or something. We've done big ones and we've done small ones, anything from £1 acquisition up to 29.8 million acquisition, and everything in between, to be honest. And what I like best though is repurposing commercial property into something else. So that could be an acquisition of a business that owns its underlying commercial property, could be a business in decline. How can we repurpose that? What is the alternative use? Therefore, what is the demand in that area? And what can we turn it into? And then what is the value of that going to be compared to what you're buying it at? And that gap, that bridge, that arbitrage is really where I kind of love to play. And there's, right now we're probably sitting in the biggest opportunity to do that. Since the 1930s. And why is that? Well, a massive wealth transfer happened in the 1930s, and we're in the decade of that wealth transfer taking place right now. And can you just go into the next slide, David? I think it was McKinsey's actually said that transfer is 27 trillion in the West. Which is, it's hard to get your head around that. What is 27 trillion? It's a lot. And it's going to transfer from the baby boomers generation to the next two generations. Yeah. So what is the big problems right now to creating this huge opportunity in the market? And then we'll quickly move on to some case studies, because perhaps probably what you want to hear, but I'm just trying to give you a little bit of 5 minutes of context and we'll go into the case studies. So right now, believe it or not, Bank of England published in June 2020 a report that said, we're in the biggest recession since 300 years, since 1706 actually, which is, kind of hard to get your head around given the asset price inflation we're faced with just now, forced on by the massive money printing machine that's happened. That's really forcing inflation. So we've got this massive recession coupled with this massive money printing coming to into the marketplace that's created this unbalanced kind of nature, and it's creating asset price inflation across all the markets down to your household goods that you shop and pay for on a weekly basis. I'm sure you've noticed it. In our space, we've seen steel increase by 89% since January, which is it's just incredible. We've also seen asset prices, freehold prices, property prices increase massively as well. And, so we've got this massive recession, money printing. Meanwhile, we've had this retail evolution happening. Obviously, spending patterns, have changed over the last kind of 15 years. Obviously, a ton of it's gone online. I think 27% of all spend now is online, which is quite an incredible stat, which is creating obviously a devastating effect on the high streets. So you've got the high street situation. You've also got this housing shortage situation as well. That's needs fixing. And as David and John alluded to before, £2 million raised on Leo probably creates a 10-15 million pound deal size, and that's probably over 100 homes they've created for people to live in to try and fix this massive housing shortage. Now, what we also have as well is baby boomers. Now, baby boomers, basically people that started turning 70 in 2016, and by 2025, half of them will be 70. And they've been 4 decades acquiring assets. And now they've turned, imagine, turning 70, you're thinking about something else, and they've become massive asset sellers. So you've got the baby boomers putting a ton of assets onto the market. You've got the high street devastating, the high street plummeting values. And then you got the recession that's kind of a two-pronged, effect that's, it's having. But what's happened in the recession as well, you've got this COVID black swan that basically has made a lot of big funds reassess their internal portfolios and think, okay, we've got this assets, a lot of them have become vacant on the uppers as offices. Let's reassess what we deem as core. And then we'll split them up into what we want to keep long-term and then what we want to sell, and they'll become non-core. So we've had a lot of funds, and we're buying one from a fund right now, and they're going through the same process. We're completing on the 5th of November. We'll touch on that soon. So you've got all these effects, massive macroeconomic and demographic effects of putting down pressure on values of commercial property. Meanwhile, you've got this massive housing shortage. And at the same time, you've got the government who's imposed on all local authorities in England the biggest relaxation in planning since World War II, which has permitted developments, MA rights, Class E, a whole slew of tools to help property developers like myself accelerate the time to provide homes for the much needed shortage. Could you go to the next slide, David?
Yeah.
Thank you. And just remind me how long we have here, David, because this slide can take a while.
About another 8-9 minutes, something like that.
Right. Okay. Well, maybe another day we'll come back to this one, because this, you could go on for a hell of a long time. Or do you want to pick something? If somebody wants to type in the chat, which one would like a couple of minutes on, A, S1, S2, E, T, or Z? Type in the chat right now, and we'll cover one right now, and then we'll maybe come back another day and go over the whole lot, because this is like 20 minutes in its own right, this thing here, or 30 potentially. So somebody wants to type in the chat, A, S1, S2, E, T, or Z, and I'll cover that right now. Or yourself, David. Is anyone you like yourself, or John?
Yeah, I think probably the one that jumps out is the exponential growth, Dan. That's probably the one that would look at.
Yeah, I'm glad you said that. So let's go on to the next slide. I'll just show you that in action, which is fantastic. So here's one we made earlier, and this is the deal that we're completing on the 5th of November. We went unconditional on this in January. It's taken a while to get here. Why do we unconditional in January? Because we had a delayed completion, and in that time between the exchange, unconditional exchange, and completion, we had obviously 10-11 months in which time to achieve all the planning permissions. Now we've got 5 different planning strategies on this one, which I don't really want to go into just now because that'll take a hell of a long time to explain. But to answer David's point, how do you get exponential growth? How can you double and triple property values? Well, the strategies at play here are, this is one of our fundamental principles to de-risk all these kind of investments for investors, is cash flow day one. So what does that mean? It means on the ground floor, we have 2 commercial tenants. One is Poundland, that's strong as Meal's Breath. They're seriously large. They have a seriously large balance sheet. They're good for their money, so to speak. And they've got 5.5 years unexpired at £260,000 a year. So they're paying 260K a year. On the right-hand side, we've got CEX, who have about 300-400 shops as well. Poundland have nearly 1,000. So CX are at 150. So we've got £410,000 coming in day one, which seriously de-risks the whole development. Usually developers target just the uppers of this kind of thing, vacant space, and then move in and do the work. We like to target hybrid schemes. So we've got cash flow day one and buying wholesale. What does wholesale mean? Well, we're buying for 5 million, and the commercial in its own right is worth about 5.3. So effectively what we're doing is buying the commercial at full value and getting the uppers for free, effectively, £0 per square foot. So when you're getting something at, £0 per square foot upstairs, and then, it's costing you 160, 170 pound a foot to develop out, and your exit values are significantly higher than that. When we analyze this first, the residential exit values are £510 a foot. Now they're at 565, and by the time they're built and sold, the valuation, the surveyor, Rich Redbook valuation chap said you'll probably see another 13-14% asset price inflation over that. So there'll be over £600 a foot, seemingly. We haven't booked that in. We just book in what is real now in terms of our analysis, and all analysis done at 510. So you can see that delayed completion adds a lot of value here. The delayed completion, we can add value by getting planning for 13 apartments upstairs. There will be 25, but 13 is within the existing confines of the building. The other 12 are additional new build on top. So we target these kinds of things. We target buying wholesale, so buying the whole thing. We're taking the whole problem of this big pension fund. Now, why is that a problem for them? Well, if you think about it from, put yourself in the pension fund shoes. Why are they selling? Well, they had £610,000 ish coming in on this building, where all the floors were occupied. The top 3 floors being kind of office space, and through the pandemic, all the office space went vacant. So their 610,000 coming in went down to 410,000 because the 2 commercial tenants are on long-term leases. So your 610 becomes 410, but it doesn't stop there because you've got negative business rates upstairs that takes that 410 down to about 300K. So all of a sudden, their income on this property is halved from 610 to about £300,000. So all of a sudden, for them, it's not worth as much, obviously, but they're also not set up to repurpose property. They're set up to buy properties with a secure long-term income in, and then sit on that income, pay it out to pension funds. They're not set up to repurpose. So how do we, in answer to that question, how do we exponentially grow this? We bought it at 5. We're spending, just about 5 on it, and the GDV is 15 million. So that's a tripling of value, not tripling, obviously, which is not too bad. I think that's okay.
It's very exciting, very, very exciting. And one thing, if I just jump in there, I think I always enjoy listening to you, Dan, talk about your projects and what you do, is because you approach these things with a very creative mindset. So you talked about 5 different types of planning on this one project. Some people may struggle to think of 5 different types of planning or different ways you could do that, but you do tend to approach these things with very much a creative, what can be done, how can value be extracted from the project.
Yeah, well, absolutely. I mean, I love the creative aspect of the whole thing, and the wealth dynamics. I'm a creator, so it kind of falls into my category of what I love to do, kind of thing, my flow, so to speak. But the creative aspect, really, for me, fundamentally, is to de-risk projects. Therefore, look at projects where we can really force capital appreciation. There's cash flow day one, and we're buying wholesale. So if you're buying wholesale, you've got cash flow day one, you've got an ability to add massive value. Then you're kind of ticking a lot of boxes here. On top of that, we then apply a tax strategy in here. Now, remember what we said before, these are all hidden in plain sight in the tax book. So you have to kind of come up with creative ideas and surround yourself with professionals who can actually deliver your kind of idea kind of thing. They mostly don't come up with the ideas, but they deliver it and put their indemnity on the line. So in this one, there's I think there's 5 tax strategies that compound with the 5 planning strategies that compound with the commercial lease extension strategies. So, what does that mean? Plus on top of that, then we've got the residential arm. So on the commercial lease extension strategies, we've got CX in at 150, Poundland's in for 5.5 years, CX expire in July next year. Our plan there, and they're paying 150. Our plan is to get them down to 120, which sounds, counterintuitive, but meanwhile increasing the value of the asset. Now, how do you do that? Well, the asset, you've got to understand how commercial is valued. And it's very valuable. Well, there's a number of different inputs, but the 2 biggest ones are the strength of the tenant and the terms of the lease. Yeah, there's then macroeconomic factors, inflation, bank cycles, and a whole host of other things that affect it as well, and who you're asking to do the valuation and who it's for. But principally, it's the strength of the tenant and the terms of the lease. Now, we can go from 150 for CX down to 120 and increase the value. Now, that's quite insightful. So if you've got 5 ways to add value here in various different components, that's what stacks up to bring in, number one, a massively de-risked project, and number 2, some quite not too shabby returns. On to the next one, David.
Yep. Okay. Do you want to just pick one of these? We've 2 more to go.
Yeah,
We're
sure.
on the home straight here.
We'll take this one. This is fine.
Paisley and Lars, we want to do Paisley sort of in 1 minute, and then we can wrap up the webinar for today.
Yeah, sure. Well, this one here, this is another one. Back to that question, exponential growth. How do you double and triple values? Well, the building that's here just now is not that one. It's a property that we bought on a business selling website, and it was offers over 340, and it was a net cost as of 120. How we did that is a fusion of business buying strategies and commercial property strategies. but it costs 120 because I haven't got much time here, and we put a tenant in there, which was kind of like a management buyout, but I won't even go into that. It takes too long. We bought it for 120. It produces £24,000 a year, so it's 20% yield. While we then thought about a bigger strategy. Why has this strategy come to light? Because it's right opposite, right over the road from the biggest university in Paisley called UWS. It's right next door to the Students' Union, and it's now not going to be 70 new build student studios. It's going to be 122 because we're just in the middle of completing a land acquisition next door to this. So it's going to go from a cost of 120. Obviously, there's a cost to build this, but this is going to have a GDV of 12.2 million. There's going to be £1 million of rent coming in, and this is by doing one thing. Looking in places that hardly anyone's looking. So I'm sometimes looking at a business selling websites for properties or businesses that own their underlying commercial property that I then look around the area. What should this be? If it's been a business that's defined for many, many years, then what should it be now? What is the demand in that location right now? And what could we repurpose that into? And
how did you source this one, Dan? Did you see it yourself at your team, or did someone bring it to you?
It's quite incredible, actually. I was at a barbecue at a friend's, and we're just as sad as we are, we're scouring for deals, and this came up on a business selling website, and I just phoned them up straight away and met him on the literally 2 days later, and then the interesting thing is from meeting him, it took 9 months to get a deal done. And that's a whole journey. Like the first deal I showed you, the journey there was, it was on the market for 7.6 million. We went into legals at 5.4, but then we went unconditional at 5. In fact, went unconditional at 4.9, and now we're going to complete at 5. And it's in our interest, and that's a journey as well.
It's a journey, and that's another interesting aspect of, suppose, commercial. It's not a going buy a buy to let somewhere. There is obviously a longer runway, if you like, from start negotiation through to owning the asset. So if people want to get in touch with you, Dan,
related to that, one of the things that Dan's highlighting is you can be rewarded for your creativity, because each deal is very different. Each deal needs a lot of structuring. Each deal needs a lot of picking apart and reconstructing. So it's not cookie cutter like you would see with buy to let, 2 up, 2 down or something. It is very much every site is a package of things or a jumble of things, and you're sort of pulling it all apart and thinking about how to sell it off or refinance or stretch a lease or terminate or whatever.
Yeah, it's definitely got a lot of moving parts, and you've got to love this kind of thing. And there's definitely problems that pop up all the time, and you've got to be in a mindset where you're looking for the challenges, the problems, you embrace them, you lean into them. Why? Because within that challenge, there's a seed of a more holistic, better result for all. And that's whenever I see a challenge, I always think to myself, fantastic. I wonder how much we're going to make more now.
Yeah, no, it's a fantastic mindset you have. I think it's why you've been so successful, particularly in the area of commercial, that you approach things from this, how can it be done different? How can it be done better? And that's a great mindset to have. So if people want to get in touch with you, Dan, or follow you on social media, where's the best place to get you?
Well, either LinkedIn or the website. The website is taylorcapital.co.uk, or we're on LinkedIn quite a lot, to be honest. Quite every day we're on there, actually. We're not really in the Facebooks much, but LinkedIn and the website, is the best place.
Excellent. Okay. And still doing a bit on Clubhouse from time to time?
Not really. I do one room a week, which is Guy Bartlett's Business Buying, as a lot of what I've done is from a business buying perspective, where we're buying a business that owns its underlying commercial property. We're repurposing, reprofiling to something else. So we kind of jump on Clubhouse with Guy, which is always a fun call. But really, I'm more focused on the website and also LinkedIn. LinkedIn's a great space. Love it.
Excellent. Okay, well, encourage anyone, particularly if you've got an interest in commercial property, get in touch with Dan, follow him on LinkedIn, have a look at his website there, Taylor Capital, to see what he does. Like John and myself, he shares a passion for education, and therefore well worth following and staying in touch with. So next week, actually, Dan, is someone that you know very well. We've actually got Alex on next week. So Alex is going to be talking about the repurposing, how the world lives, works and plays. So it's a great sort of vision statement, repurposing how the world lives, works and plays. And looking forward to having Alex on next week. So this has been absolutely fantastic. Any last comments, Dan, and then I'll go to John, then we can wrap up.
No, I think back to what I said before, you're in a great space because through Leo, you get access to a lot of different transactions. And within those transactions for £100, you can pick up contracts, find out how the deal works, get that education piece, which is fundamental, and get exposure because, everybody needs one thing, multiple diversified income streams. You got to spread your risk and diversify. For me, that's a magic thing, and doing it a while outsourcing, leveraging, so you're not spending all your time doing it.
Excellent. And John, any wrap-ups? That's been a really interesting broadcast today.
I mean, I could listen for hours to Dan when it comes to deal structuring things, because it really is about, it's sort of like pouring out a bunch of Legos and what can you create? And Dan takes this sort of, there's a structure or a lease or a piece of paper, and how can I create more money out of that without actually touching a physical piece of, no tools, nothing else. Dan doesn't do that. You can tell from his background that he's more of a, gets his fingers done, plays golf. It's all upstairs that he makes his money.
In fact, a lot of these ideas come to you on the golf course. So I always recommend that.
Well, so speaking of golf, to finish off, I think between now and your next visit on the broadcast, I think we should have a round of golf in Spain. How does that sound?
Sounds great to me. Absolutely.
So you're inviting Dan to your place, David? Is that it?
Dan, I've just invited myself to Dan's place, I think.
Yeah, well, I wanted to be clear about that.
Absolutely. More than welcome.
Yeah, no, we'll definitely get something arranged. It may end up in more likely a golf course in Scotland and Spain in the very short term, but we'll see.
We should have a game at Turnberry when we get back. That's a beautiful golf course. Ailsa, right on the west coast, facing Ireland. It's beautiful.
And is John going to carry your bag or my bag? Did we work that out? Did we?
I'll meet you at the 19th hole.
Very good. Listen, on that note, Dan, thank you very much for your time. Really appreciate it. You're a very busy man and fantastic to join. I know people have enjoyed that. It'll be on our YouTube channel in about an hour's time. We'll be repurposing some of this onto social media, so you can watch out for that. Dan, I'll keep you posted, and you can post it onto your LinkedIn as well, and get a bit more eyes on your information today. So listen, fantastic, everyone. Thanks for joining us today. Hope you've enjoyed that, and we'll see you again next Thursday.
Thanks very much, guys.
Bye-bye. Bye-bye.